Everyone, and welcome to this morning's webinar. I just want to check that everyone can hear me. David, can you hear me before I start? Oh, good. If he can hear me, then I know everyone else can. Right, very, very quickly, before we start, can I just draw your attention? I can hear myself in your headset. Yeah. Oh, okay. Before we start, as usual, can I draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be very, very tricky and very risky, not just tricky. So please, please don't ever think of using money that you cannot afford to lose. Okay, I just stepped away from my desk to do a couple of things, and I sort of and I was about to say when we started that it was all a bit sort of desultory and etc., etc., for lots of reasons. We've had a bit of news for the euro. It was the German industrial production figures which came in much worse, well, not much worse, worse than expected. And lo and behold, I come back to my screen and it's all sort of kicked off, which is great. Apparently, David was saying the indices have ticked up. Essentially this week, compared with last week, it has been a lower volatile week in the sense that not volatility caused by unexpected announcements, it's just been a quieter week. Volatility has these two meanings. It has this when you have this unexpected, inrush of energy into the market and prices go all over the place. For whatever reason, it could be a piece of news, it could be something geopolitical, but you also have to understand volatility from the perspective of what you can expect from the trading session ahead, from the day ahead, from the week ahead, in terms of the range, the breadth that in this case the Forex pairs are likely to move or not, and the markets generally. And it's this different states that the market are in, not just in terms of price action, but what they can deliver, and the reasons why we're in a lower volatility week, as it were, which you have to be aware of and have to recognize. Now, you can use the options market to help you try and figure this out. In the indices and stock market, we look at the VIX. As the VIX falls, we know that it's very much risk on. Markets are becoming very, very complacent. I have a very nice indicator here which says that we are at extreme greed. Now, what that also means extreme complacency, and you will find that is reflected in price action. Price action is not volatile. It can be very measured. It can be very narrow range. It's just, and it can be very, very desultory. It's a very different trading condition from when you have, as I said, volatility coming in, or the markets are trading against a background of great uncertainty, political uncertainty, etc., etc. Now, if you don't use the options market, you don't really understand the options markets, and they are very, very specialized. It's something we're thinking of doing, putting together a little course on, because once you understand how the options market work, it's a really nice little tool to help you, make sense of the price action that you see. You then have to look at the charts, and look at the charts in the sense of, are they in congestion? Are they range bound? Are they, they're just drifting? And the indicators that, some of the indicators that we've developed specifically for this, because understanding what we're looking at on the charts, putting it in the broader context of what's going on in the market will help to answer all those questions. Now, I've got up here the hourly CSI. My time frames are at the hour. I use it the 10, the 12 minute, the 3 minute, and I use a Renko. Renko will also help to answer a lot of the question, give you the answers to some of the questions that I posed in this little intro. And what's interesting, if you've had the hourly CSI up, those of you who are our quantum users, you will know that we have had this very nice divergence between as we can see here, the yen, the dollar, and the Swiss franc, all sort of at the top, waiting to kind of turn over. And we had a bunch of currencies down at the bottom here. Now, what's interesting, as David has been noticing, is that there has been this uptick in the indices. There's a nice strong move. Maybe there's something on China. The one big question that's haunting the markets at the moment is what is going on with US and China. There's been as of yesterday, there was a delay as to when they're going to sign phase 1 of the tariff the tariff agreements. Now, obviously, something possibly has come in. I'll go and have a look on the newsfeed. The immediate reaction in the market has been the sell of the Japanese yen. The Japanese yen is the go-to currency, the safe haven currency, and also the risk currency. So when things are risk on, it will be sold. And similarly with the Swiss yen, but it's the yen pairs which will then react strongly in this mood shift between risk on and risk off. And what will it be sold off against? Well, one of the prime currencies, because it's China, will be one of the commodity dollars, in particular the Aussie. And I've written about the Aussie yen actually on my Facebook page. Right, so that's what's happening on the hourly. I'm actually going to go straight over to David. The pair I've actually been looking at is the pound Aussie, but for the simple reason it's a great cross pair. And it also actually exemplifies everything that I've been saying in terms of congestion, waiting to get a feel for what is happening when there's nothing happening in the market. And suddenly we've had this news, and in fact, because it's got the Aussie in the cross, as we can see here, lots of congestion. The trend monitor tells us it's going up, down, not going very far. There may have been an opportunity to take perhaps a few pips here and there, depending on the pair, whether it moves enough in the faster time frames. And suddenly one piece of news, bang, pound gets sold, but it's more a case of the Aussie being bought because of what is happening in a related market. And as David will explain later, this is something that we cover in our Forex program, where not only do we explain how to analyze the charts from the perspective of volume price analysis, but actually put all these other elements together so you can make sense of what is happening on the chart, and maybe more importantly what is likely to happen as well. So I'm just going to pass over to David, and I'll keep an eye on, as I said, I've been waiting for the Aussie pound Aussie to fall based on the congestion that I had on the 3-minute, the 12, and the hourly. It has pulled away, as we can see here on the charts. I'm looking at this point here. This yellow line here is the volume point of control, but it's also been accompanied with volatility. I've got a volatility candle on the hour, so I'm not sure how far that is going to go.
Just switching screens. There we go. Just looking over on Anna's. There we are. Just coming up. Great. Just move the chat box out of the way. Very warm welcome to you wherever you are in the world. Hope it's nice where you are. At least we've got the sun shining here out the window this morning. This is on the Renko. Just starting with a non-time based chart. This is on Renko. This is the ES up here. This is December contract. So that's 12.19. And this is on the automated Renko. I've got this, in other words, the Renko indicator, the Renko optimizer is calculating the optimal brick size for me. I haven't specified this, I've just selected up here. Yeah, it's all trade, yeah. Okay, it's Anna's got Talking Forex up. It's all to do with trade wars, no great surprise. And this comes and goes all day long. And that will be reflected in risk on and risk off, which is all this business is about. It's nothing else. It's money chasing higher risk for higher reward, or lower risk for safe haven, lower reward. And it's that simple. And it's that constant push me, pull you, which works across all the related markets. It works through bonds, commodities, stocks and equities, and of course in Forex as well. And it's reflected on the indices. This, as I say, this is the ES, this is the S&P 500, the futures contract, emini contract. And currently the Renko optimizer we're running at 3, which is basically 3/4 of a pip. So each of these bricks is a tick rather, sorry, beg your pardon. This is on ticks, so this will be 3/4 of one full size. In other words, 3 out of 4 ticks. So each of these will be 3 ticks on this particular contract. Really nice run high, very simple setup. I've got the trend dots on here, which work very close to the market. They transition relatively quickly. And in addition to that, as you can see here, at the moment, we're moving into congestion. So they've gone into grey. We had the run up. We're now in congestion. And down below, this is the trend monitor. And what we always recommend is that when you have both indicators, you have the trend dots and the trend monitor, purely because the trend dots work very close to the market. The trend monitor takes a more considered view of price action and helps to keep you in through these minor pullbacks. We got a transitional change here on the trend dots, but we got absolutely nothing on the trend monitor, and that's the way it's been designed. It's been designed to hold you, to help to keep you in through those phases of price action, which are the most damaging. When the market reverses, you've maybe got a nice bit of profit in the account and the market starts to pull back against you, you panic, you close out, and then the market continues. For example here, a lot of traders will have taken that, jumped in, fine, got some money in the bank, market starts to pull back and they close out. That's it, exactly the same here. We're now moving into congestion phase. We've got this resistance here. We've got a minor platform, these little levels down here, where it says 1, this is on the accumulation distribution indicator. And the way that works is very simple. In terms of the more times a level is hit and acts as support or resistance, then this increases. This is 3, and it's also reflected in terms of the thickness of the line. These have tested and held once. This guy down here has been tested and held 3 times, which means it's a much stronger level, and that's reflected in the thickness. And these ones down here are very strong indeed. These have been tested multiple times, so when a market moves through that, as indeed it did here, you've got the comfort of knowing that below you, in any minor reversal, as indeed it did here once it broke through, you've got an immensely strong cluster here, not only of 1, but you've got 3 there, which are providing a very strong platform of support should the market reverse against you. So that's on the Renko. Let's just have a quick hop over onto the indices themselves. These are the 3 of them. A lot of volatility, as you would expect, good supporting volume. We've now got volatility triggers coming in, and we're also trading around the volume point of control. These are 5-minute up here, so this is on the Dow, this is YM, this is NQ and ES. So we've had that burst of activity, and as often happens with these things, we call it the souffle effect. In other words, it rises and then it collapses almost straight away. It's happened innumerable times over the last few years, not only in indices, not only in terms of trade wars, in terms of currency wars, in terms of Brexit. The market explodes on a piece of news and then promptly collapses. It's a great opportunity. When you get these moves, which are a knee-jerk reaction by the markets, the market makers are in there. They know exactly what they're doing. They're going to ratchet the market up very quickly. Yes, you can make money, but you've got to be aware of the fact this is probably going to reverse equally as quickly. And the reason for that is very simple. We're now trading around the volume point of control on these markets. We've got this yellow line. This is building volume in these regions. It's telling you that at this level, at the very least, we can expect congestion to build, which is what we're seeing across all 3 markets. That said, the longer term trend down here has been very bullish. We've written about it extensively through these various levels, breakouts, breakaways, good volume supporting, and the markets are now picking up the longer term bullish trend once more. Just going to switch off for a moment. Just had to clear a frog in my throat. Right, let's head over to, this is the other place I like to have up all the time. These are the currency indices themselves. Gives you an instant view of what is going on in terms of the primaries. Top left is the yen, top right is the dollar, bottom left is euro, bottom right is pound. Good strong selling on the dollar. You can see here we had congestion. This was the nice thing with Ninja is, which is very different from MT4 and MT5, is the timestamp print will give you your local time. So it's very easy to pick out where we are. This is 7 o'clock our time. Local time here is 7:47, so we've got 13 minutes to run to the UK Open. So this is 7 o'clock. This is the open of European markets, and all of this is congestion in Far Eastern Asia. So we're now starting to see some decent selling of the Aussie. We've had selling of the Japanese yen, and that was in terms of risk sentiment. So we've got risk on coming down here. Now we're starting to see a little bit of risk off as those indices roll over a little bit, and that's what we're seeing reflected in terms of the yen. A little bit of reversal in the yen, so we've got a little bit of minor buying of the yen coming in. Still heavy selling of the dollar, you can see it reflected there. Over onto the pound. Pound's whipsawing around. We've got BOE up later, I think, isn't it? Yeah, which is, of interest, but the dominating factor at the moment is Brexit and the elections and all the rest of it. And until that's all sorted, then the rest of the news can pretty much come and go without having a major impact. And over on the left here, euro, we've got some euro buying coming in. This was 7 o'clock, so as we get through into Europe, expect to see some moves in the European currency, the single currency. So that's something we have up all the time. Just keep a heads up on that. Let's go over on to the multiple time frame charts. There we go. I've got the CAD yen here, but pretty much you'd see this reflected across all the M pairs. I just happen to have the CAD, which is one I was looking at earlier on. This is the yen selling we've seen. Let's pop that up. This is on 5 minute. There we go. Lots of volatility. The volatility trigger comes in real time. Under normal circumstances, what you expect to see is a congestion or a reversal. It doesn't always happen. As you can see here, it follows through into the next one. No volatility on that one. Now we've got volatility. And the difference with this one is we've got a lot of volume under it, but more importantly, we've got a deep wick to the upper candle, the top of the candle, the top of the body, which is telling us not only we've got volatility, but we've also got a decent amount of selling in this particular candle. So we are expecting a reversal at least. It may not break the trend, but at the very least you're expecting a congestion phase to follow and possibly a reversal depending on the extent of the selling pressure that then follows through. As I said, this is the souffle reaction. You see a rapid rise and then you see probably a rapid fall as well, equally as the news calms, and it's just a knee-jerk reaction. The market makers jump in, take the opportunity to make some quick bucks first thing in the morning before the London Open, when they're going to make another load by chopping out traders who have no understanding of moving through a session and get chopped to pieces and chopped liver in the reversal process that invariably follows that particular period of the trading day. Yeah, we've got London coming up, and we drop down onto the multiple time frames. This is on 15, same sort of picture, but again, we've got the volatility trigger here. We've got heavy selling in here now to the top of the candle, closes halfway down. We're going to see congestion anyway because we've closed down here. We're trading around the volume point of control. We've got lots of clusters in here. We've got a cluster of potential support. You can see it being tested there. We've got a high volume node, and we've obviously got the volume point of control because this is the most extensive volume on the chart at the moment. Trend monitor is transitioning. It's quite interesting. It's transitioning through into a bullish phase. We've come out of the bearish phase. This is the classic transitional colors that you expect to see on the trend monitor, moving from heavily bearish, bright red. Then we get the darker red as the market starts to congest and perhaps reverse. Then we move into the darker blue as the sentiment does indeed shift towards a bullish phase, and finally out the other side into a brighter blue color. So we've gone through the complete spectrum there of changing from a bearish picture to a bullish picture. And that's also reinforced with the trend line here. This is the yellow trend line, which is part and parcel of the trend monitor, so it's two indicators in one. And basically what this does is giving you a heads up in terms of the trend itself, the strength of that trend, whether it's strong or weak, flat, and also through the fulcrum point here at 0, and we're now starting to see that kick up quite strongly. It also gives you just a heads up in terms of the extent of the trend. Once we get down into the further regions away from the midpoint line, then it's giving you some context for whether that particular trend is perhaps pausing, coming to an end, reversing, whatever it may be. And as always, that's always used in multiple time frames. It's the power of using multiple time frames, not only in terms of the charts themselves, but also in terms of the indicators as well. And we've got a similar sort of picture building on the 60 minute. You can see here, this is on 60. It's what I said earlier. The volatility trigger comes in before the candle closes. So as soon as you see volatility, it appears before the candle has to close. So instantly, you know this price action has moved outside the average true range, which is how the indicator works. And it's giving you a heads up. Two things. First of all, we've got widespread price action. Secondly, we're going to have the market makers in there. So be warned, expect reversals, expect congestion. This is sort of classic, very fast move to the downside. This would have been triggered in real time, and then we get the reversal back in. It hasn't broken the trend, but what it has done with these traders who've jumped in to this particular opportunity, shorting the market, have then been squeezed out by this rally and either stopped out or got out of the market because they thought the whole thing was going to reverse. What's interesting about that particular move, and it's a facet of volume price analysis, which we cover in detail in the program, because staying in a trend is one of the hardest things to do. As I said earlier on, it's one of the reasons we developed the trend monitor, but specifically for that reason. And the application of VPA in terms of understanding the primary and secondary trends, if you can understand whether the pullback you're witnessing is a true reversal from a primary to a primary, in other words, from bullish to bearish or bearish to bullish, or is it simply a secondary trend or a tertiary trend under Wyckoffean language in which the reversal is not a reversal, it's just simply a pause and pullback. And this is just a classic example. We've got the volume falling away, we've got the rising market and falling volume, which just exemplifies what it's all about, and the fact that if that were going to be a strong reversal, then you would expect to see the opposite of that. You expect to see rising volume, you've got falling volume with it. It's one of the powerful applications of VPA. Let's just have a look and see what's happening on the Aussie yen. Probably a very similar picture. There we go. This is on 1 minute, 5 minute, 10 minute. Forgive me, I didn't highlight the time frames. Got 1, 5, and 10 across the top. Down the bottom, we've got 15 minute. This guy is the 60 minute, and this is the daily over here. Just pop that one up. There we go. And you know, classic example of selling. We've had the rally. We've got the volatility trigger. Then we get this candle here. We've got an absolute ton and a half of volume beneath it. There's only one way that's going, and it's not up, it's down. And that's just a very, very simple example of volume price analysis in action. The classic upthrust candle or shooting star candle, call it what you will. We've also hit the volatility region. We've got the volatility point. We've got the beg your pardon, volume point of control here, the yellow dashed line, which is the fulcrum of the market. We've got some decent resistance, this blue dashed line. We've got some decent resistance here. We've got heavy volume here. And is there much in the way of support below? Not really. We've got volume which is going to come into play. So we're expecting congestion at this region. We're expecting a pullback as soon as we see that particular candle. Very simple and very powerful. Let's just go over to the currency indicators themselves, the specific ones. Where are we? Where are we? Where are we? There we go. That's it. Let's pull that back. Let's go over there. This is on, I've got a 5 minute here. This is on the currency strength indicator. I've got the 10 minute here, and I've got the 15 minute over here. So we're looking at, again, as I say, multiple time frames. And what we're looking for all the time is opportunities. And those opportunities will depend on your personality and what tactics you want to take to market. Are you more comfortable as a reversal trader? Swing trader, if you like. Are you a trend trader? Do you like to jump on trends once underway? Are you going to take a specific tactic to market and apply it indiscriminately to every single currency pair? Or are you going to take a basket of every single tactic and apply it to every single currency pair? You're, again, indiscriminate. You don't really care. You're just looking for opportunity. Are you going to take a single tactic and apply it to a specific numbers of pairs, or are you going to take one tactic and look across a multiple array of pairs? That is what you have to sort out as a trader. I can't give you the answer to that. It's what suits you and your style of trading, your personality, how much time you have available, where you are in the world. All sorts of factors come into play, but that's what you have to figure out for yourself. We have the luxury of being here 24/7, pretty much. We trade pretty much everything. From Forex through to all the other markets. It makes no difference to us because we understand the chart structure, we understand how the markets are all interrelated, and we understand the relationships, and therefore we understand sentiment, and therefore we can trade what we want when we like. And applying any particular tactic. When you're looking at the currency strength indicator, are you looking at the extremes? I always start at the extremes. I'm always looking at this. I'm looking for what are the opportunities for reversals. I've got the yen down here, which is oversold. I've got the Swiss franc oversold. I've got the dollar oversold. Up at the top, I've got the Aussie overbought. The commodity currency is basically all overbought. This is on 5. And we've got strong buying in the euro, so that's moving up into overbought. Pound's kicking up as well. So you step down onto 10 minute. What are we looking at here? Pretty similar picture. We've got the commodity currencies up here, overbought. The euro's rising nicely, getting up into overbought. Down at the bottom, we have a whole bunch of currencies down here oversold. And the same on 15, but slightly slower. Still got some way to go. If I'm looking at this reversal, then I'm looking at the extremes, and I'm spoiled for choice. And it's a question of looking at the extremes and then going off to the charts and deciding thereafter what is likely to deliver the best opportunity for me. I look at the chart, I look at the support and resistance levels ahead, I look at where the volume point of control is, what's like to cause a barrier to any move that I'm considering, and then off we go and we pick our poison and trade accordingly. Over onto the currency matrix. Once we're looking at opportunity, we're looking for sentiment. We're looking for what's rising strongly, what's falling strongly. We just isolate out on the yen here. It's got that yen selling that was self-evident that we saw on the indices, we saw on the yen index itself, and we've also seen in some of the currency pairs. That's what's driving at the moment. But as that yen selling reverts to yen buying, then gradually these guys will start to drop down this particular matrix. That's where they're sitting at the moment. But if that sentiment is going to weaken and we're going to see yen buying coming into the market, then all of these will start to track lower. If I click onto the 10-minute time frame, just isolate out the yen again. Just starting to see that pattern take place, and up onto 15. And what you're looking for all the time as a trader, whether you're a scalping trader or a longer term trader, you're starting with your faster time frame and you're looking for opportunity that is going to ripple right the way through the market. So when you're looking at the CSI, when you're looking at the matrix, when you're looking at your charts, whatever you're looking at, you're trying to identify an opportunity that has got some momentum. In other words, it's starting in the fastest time frame, whatever that may be, a 1 minute, a 15-second, doesn't matter. And if that sentiment is strong enough to ripple through into a 2 minute, 5 minute, 10, 15 and on down the track, then that will ultimately develop into a decent trend for you. That's what you're looking at. That's what you're looking for in terms of the CSI. You're looking for those overbought, oversold regions, and then for those extremes to start to kick in as the trend starts to develop and take hold. The payoff for you as a reversal trader is you get in early. You pay a bigger price for that because your stop loss got to be set much wider. It's a simple fact. You've got to wait and be patient. You don't know when the trend's going to start, but it will start, sure as hell start at some point. So you have to set a wider stop loss. That's your ticket of entry. You are paying for a premium seat, but in paying for a premium seat as a reversal trader, you're also maximizing the return on the investment, because once that trend starts, you've got in early. Everyone else that comes in thereafter has got in late. They're jumping on a trend. The payoff for them is they pay a smaller price. The ticket price of entry is much lower. Their stop loss can be 5 pips, 4 pips, 8 pips, whatever it may be, whereas yours might be 15 or 20. But their payoff is much smaller. They are only going to take maybe 10, 15 pips on a decent trend. You've got in early, you might be getting 20, 25 or even 30 back. That's the difference. It's as simple as that. It's just the way trading works. Everything is about risk and reward. If you pay a higher price, then you expect a higher return, and a lower return. It's as simple as that. Just head up onto the currency array. This delivers a visual heads up on strength of trend. You can see here on 5, the strongest trend has been in the Aussie yen. We've got very much the yen pair sitting up here at the top. These are all tracking. Let's just isolate that out. The yen is a nice currency to isolate, purely because the yen is always the counter currency, so you don't have any pairs down at the bottom here. So when you've got that array where everything is grouped together and either rising strongly or falling strongly, not only did it tell you about the strength of trend across the particular matrix, it tells you which currency pair is rising strongly, or falling strongly. It also tells you whether that sentiment is universal across the complex, which it is here at the moment. In other words, there's no divergence. You haven't got some pairs which are moving in one direction. If you've got maybe dollar yen, Swiss yen down at the bottom here somewhere, clearly there's divergence. What you're looking for the whole time is universal sentiment. If you're trading a pair, you want to know that the market is also trading in the same direction universally. So if you're buying or selling a currency, you want to make sure that you're trading with the river, the flow of the river of sentiment in the market. Is everyone buying the yen? Is everyone selling the yen? If so, fine. It's when you get divergence and you're trading a divergent pair and you're not aware of it, it's a much higher risk proposition. You're simply looking at a chart and you're not aware of market sentiment, broad market sentiment for that particular currency. In addition, on the currency array, you also get the ranking ladder here, which gives a heads up as to when currencies are moving up into oversold or overbought territory. If they're darker, then they're moving to that condition. When they change to bright colors and the brackets are removed, then they are at those extremes. They are at condition of potentially overbought and oversold. You can see it in the Aussie yen here, right at the top. We've got the pound Aussie. So we've got strong buying of Aussie, strong if we isolate out the Aussie just to find out what's happening to the other currency in a pair, if you like. We can isolate out the yen to find out what's going on in the yen, but we can also isolate out the Aussie. Strong move in the pound Aussie. That was being driven almost certainly by the Aussie buying and China. So it's a double. It's one of Anna's favorites, the pound Aussie. Cross pairs, I have to say, generally speaking, tend to be more volatile, but they also tend to deliver more. So when you're looking at them, don't exclude them from your radar, if you will. They do, and particularly when you're moving from Asian sessions into European sessions, you will see strong moves in currencies like the Euro, Aussie, purely because you've got those cross flows coming into a European-based currency and out of a Far East Asia currency. And finally, down onto the currency heat map. Get that out of the way. There we go. Down onto the currency heat map, which just gives you a heads up on everything. It gives you a visual on all the time frames. This is from 1 minute right the way through to 1 month, all the time frame cells. It just gives you a visual view on whether the time frame for that particular pair is bullish or bearish right now, whether it's changing, whether sentiment for that pair is rippling through. It's what I said earlier on. What you're looking at here is you're looking across the time horizons. Down at the bottom here, we've got New Zealand CAD, a little bit bearish on 5 minute, but the bullish sentiment is starting to ripple through, and it's up to 30. And once it starts to, this number here starts to drop, and you start to see the prospect of this moving out here, then you're starting to see bullish sentiment develop. And what that will dictate is the ranking of these currencies down here, because these are all weighted according to the time frame. The slower the time frame, the heavier the weighting, which is just common sense, because you wouldn't expect a 1 minute time frame to have greater weight than a daily, for example. So these are all weighted. These will move up and down during the day, but what it's telling us right now is we've got if you like, a bunch of New Zealand currency, the New Zealand currency itself, which is very oversold in terms of pairs. If I isolate it out, there we go. It's universal. Now what we're looking at as an opportunity is this really from, if you're looking at this from a reversal perspective again, then this will be based on a longer term time frame. So this is for traders who perhaps are working. You don't have the luxury of, excuse me, I'm just going to switch off for a moment, another frog in my throat. Will do. This is if you're working, and this is a much lower time frame. So these are opportunities for considering these guys over hours or certainly days, where once the bullish sentiment takes hold, these will start to slowly creep up the ranking ladder. They may even get right to the top. But what it's telling us right now is certainly the New Zealand dollar as a currency is an opportunity for a longer term position of a buy. I'm going to pass back to Anna. That's not a recommendation, by the way. It's just a visual observation. I haven't, no. Have you got it on? Yeah. Anna's just popping another, let me just, while she's doing that, sorry, and then we'll switch over. Let's just go back onto the charts for a moment, see what's there. There we go. There we are. We've got the pause point at the moment. No great surprise. We're at the volume point of control here on the 10 minute, starting to break away on the 1 minute here. And we've got volume point of control everywhere. This yellow line, so we're in congestion here. This is on 10, 15, beg your pardon, 60, 10. Lots of congestion. Market's trying to break away, trying to rally higher. And from just a perspective of getting in, what we're looking at now is really a move beyond sort of 25. Once we clear this candle here, if we can get up to 75.25, then we should be clear away from this region, breaking away from the volume point of control, lower volume here, clearing this guy here, trend monitors bright blue, remaining bright blue, very limited support below, but that's what we're looking at. We're looking for a break through that region. Pretty similar up here. We've got more sustained, a little bit heavier resistance. We're literally being tested as I'm talking here, this level at 15 and 16, this dash level here, this has been tested a couple of times. So if it breaks through that, that's a nice level of support potentially. We've got resistance here, that was tested here, you can see it right at the top of the candle. So if we get through 21, 22, 23, then we should be, 25 should be up and away on low volume up at this on the histogram. Let me pass back to Anna. you okay? Can I pass over to you? Yep. Okay. Just passing over to Anna.
We're back to the pound Aussie profile that I set up because it was my it was a great way to it was just a lovely example of explaining what I was talking about earlier, in the sense that trying to establish the condition, if you like, the market, let's call it market mood, market condition. You know, what are the, how is that reflected in the charts? And actually, much more important, is it going to offer some kind of trading opportunities? If you haven't got the you know, the advantage of only quantum indicators is that just by a quick look at something like the hourly CSI, you will know exactly what the market has been doing, is thinking at the moment, is potentially going to do, because we said at the beginning we had the yen at the top, we had the dollar, and we had the Swiss franc, and at some point it, you know, was going to turn over, and it turned over quite dramatically on a piece of news from, if you like, a related market. So if you like, the indicators did the job for us. But supposing, you know, we hadn't had that piece of news and the market was still stuck in this kind of limbo, as it were, you know, waiting for maybe some fundamental news, waiting for the London Open has now come and gone, waiting for some kind of resolution, some further news, you know, what's happening between China and US, because that event, if you like, is really driving sentiment at the moment, rightly or wrongly. So, you know, being aware of all that and understanding all these relationships is something that you have to develop as a trader. It doesn't come immediately. You know, don't, if you're a new trader, you can't expect to, you know, have this all at your fingertips, you know, in 5 minutes. It's taken us a long time to get to this point, and it's part of the reason why we've done the program, because with the program it kind of short circuits the, you know, your learning curve. You don't have to go through our learning curve in, you know, putting all this stuff together. But setting all that aside, let's move the CSI over there. I also have the matrix on the same chart, because it allows me, for example, this morning when I looked at the charts at about 6:30, 6:45, very you know, quite early, it was difficult to see what was going on. All I could see was the hourly chart had this divergence between the currencies, so that told me that, yeah, it, you know, potentially that something was likely to happen, but it was still it was difficult to see, you know, what was going to move. I knew the euro was likely to move because we had these industrial production figures. We've got some more euro news coming up. We've got is it an economic forecast and and something else. So I knew that was something was, you know, something always happens. Something's always going to drive currencies in one direction or the other. But looking at the faster time frames, which obviously we can't here because, you know, time has moved on, all these lines were bunched in the middle on the faster time frames, which is really, that tells me, yeah, that something is possibly going to happen, but it ain't happening at the moment. And this is where we have to be patient. So I just moved the CSI over there. Now moving back to the pound Aussie, I've had to move up to the 5 minute. I either have the 3 or the 5 minute up here, because if you recall, the reason I chose this pair, I trade this pair a lot anyway, and I write about it, and it's because it's just a wonderful pair. It does deliver some, you know, what I call nice looping price action. This is the volume point of control. It's that point on the chart where price is in agreement. It's got elements, the indicator has got elements of market profile in it. Sometimes this area is called fair value, and it's the zone on the chart where really traders, investors, they have no desire to take the price in one firm direction or the other. Now you will see this in all the indicator works in all time frames. Obviously, it's also dynamic in as much as this area of volume, and this is volume based on over time, as it were, builds up. this line will then move, and this histogram will, as you see, this shading will move further and further across the chart. Now, what was interesting with the pound Aussie this morning is that on my preferred time frames, the price action was around the volume point of control in all the time, not in the same place, but in the same price point, but it was all in congestion. On the hourly chart, it was there. This is the break. This is on that dramatic reaction, as it were, from to the news on the 12-minute, and it was also on the hour. And this is actually quite important, because on the slower time frames, if you like to take trades on the faster time frames, you have to have some kind of benchmark time frame. I use the hour because it really encapsulates the amount of time that I'm likely to stay in a trade. I'm probably look at the daily as well, but I tend to confine myself to the hour, as I said, the 12-minute 3, and I have the Renko chart to help with actual entries and exits. And what the hourly was telling me, look at the price action moving over to the left of the chart. It really has been, range bound, stuck in this range. It could be quite a wide range, and the individual candles within the hourly chart. Look at that candle there. There may have been an opportunity on the faster time frames, but just to give me an idea of what I can expect at this moment, and what am I looking at in terms of the condition and state of this chart, it was very clear. This is the break, as I said, on the news, and it was just it just told me instantly that yes, there could possibly be a trade coming up, possibly maybe to the downside based on what I could see over on the CSI, but nothing is guaranteed. As I said, we've got the BOE later on for that's going to affect the British pound, and with the Aussie, we've always got to be aware of the broader what's happening in the broader markets in terms of sentiment, and also particularly if there's any sort of Chinese related news, that's always going to affect the Aussie. Now, if we look at the Renko chart, which doesn't have time in it, all it is pure price action, but this reflects exactly what am I likely to face? What am I facing at the moment when I look at this chart? Well, look at the trend monitor. It's flip-flopping in and out, in and out, in and out. Market is moving sideways. It's a very, very difficult state to be able to trade, unless you're some sort of algo trader and you're literally trading microseconds. But for the majority of us, what this price action is telling us is, and where the VPOC is based on the chart, is you have to be patient. There will be a trade, there will be some divergence. What causes that divergence? Well, on this occasion, it was, as I said, it was this reaction. Now, there's a number of ways you could play this. Given that we can see these, all the price action around the volume point of control, you could put limit orders in. You could do the analysis and say, yeah, I realize this is what I'm facing. And I look at my CSI and I can, I think there's going to be a reversal at some point. So rather than try and trade it using market orders, you could, before, having looked at the state of the charts, you could have said, well, you could have entered maybe a limit order in and say, yeah, if the price gets down there, it will be triggered and away you go. So that's one option you have. Now, the other advantage of looking at price action, particularly when it is rotating around the volume point of control, this area of fair value, is that it really does help with your stop losses, because the chart tells you where your stop loss is likely to be, because with the VPOC, with these areas, with these zones of congestion, when price is going to, if it goes back to it, it will retest it. It tends to retest it, within a few pips either way. So your stop loss, it can be fairly tight, obviously, on the other side of the line. Now, much more difficult. We don't suggest, we don't follow a fixed ratio when it comes to trading. what we do is by looking at the charts, that we allow the chart and the market to give us, you know, some clues as to where the price, you know, what is the objective, you know, where is it likely, what is it possibly heading to. We have an indicator called a Camarilla, which is based on, as I said, it's based on pivot, on floor pivots. It's got other things in there as well. So I don't have it on here, but you use that. But you use the slower time frame charts to, with support and resistance, which is part of VPA, as potentially a target. If you're not going to be at your screen, then you're going to have to set something, and maybe if a fixed ratio is what, you know, makes you feel more comfortable, that's fine. It's not, for us, it's not a question of comfort. It's a question of, the market doesn't care that you want to risk 10 to make 20, or you want to risk 20 to make 10. It really not interested. The market will do what the market will do, but it does respond in a fairly consistent way to areas of support, areas of resistance. It responds to the Fibonacci levels. So how you set your objective, your reward, if you like, as I said, you're going to have to come to that decision and stick to a system, a methodology that you feel comfortable with. So, and you would have to use, so if we're going to use the, say, the 5 minute as the trigger, then I would suggest you go up to a slower time frame. Here we have the 12 minute. Let's have a look. You would have to just look at those levels and think, yeah, I think it's got a good chance of getting to here or wherever, and maybe that's where you set your price objective. Now that could be, you know, risk 12, make 24. I don't know, but don't be, you know, don't be obsessed. I think obsessed with a fixed ratio. Is that right, David? Is there anything you want to say to that? I can't think of any other way of explaining. Now, quite interestingly, as I said earlier, with regard to, this is the 12 minute, how price action can go back and test the volume point of control, and the volume point of control can then add its own weight, either in terms of, it acts as support and resistance, but with the added advantage of volume. And we can see here, it's gone straight back there. So what it does, it will actually pause the price action. It will, if you like, slow it down, because it's coming up to an area where there is a density of a volume based over time. When it goes through these areas like this, where the histogram is very narrow, is we call that a low volume node, you will find price action will go through that area very, very quickly. In terms of, if you are at your screen and you have, as I said, you have the Renko, well, the rule of thumb, and I will only call it a rule of thumb, and it's my rule of thumb, and it's something that you would have to, if you have the indicator, you would have to, you know, work out for yourself, you know, find something that you are comfortable with, is you look at a change of the trend dot matching with the trend monitor. Now you could look back here and you can see we had that little occasion there when they had a change and it went absolutely nowhere, because it's in congestion. You don't use the Renko in isolation. You always use it in conjunction with the time chart. The time chart, you know, we know that it was in a congestion phase, so you know we're waiting for a clean break, which we got, but we got it on volatility. The price action was outside the average true range. Now when that happens on your benchmark chart or the slower chart, as it did here on the hour, we are pretty certain that this price will retrace within the spread of this candle. So as soon as, if it's, another rule of thumb is that if you manage to get into a position, either from a limit order or from a market order, and then volatility comes in, and that volatility is then triggered in the slower time frames, you could say, do you know what, I think this is actually going to go straight back in before it carries on in the original direction. You could actually use that as an exit. Do you agree with that, David? So that's another way of looking at how to use understanding the volatility and using the volatility to your own advantage. So from here, what are we seeing here? We're seeing a kind of reversal. Well, no, not really, because we are still trading in the, as I said, within this volatile price action. What's interesting is on the 12-minute, it has gone back to retest the VPOC. Everything is now going to slow down, and having this sense of speed in the market, in the sense of how long something is going to take to develop, is the way you can develop that is by understanding what the price action is doing at the moment. So if it's in congestion and very tightly in a range bound, it's not going to move. It's not going very fast. It's not, and it's probably not going to go very far. Having something like the volatility indicator, bang, 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 those, the range that happened, the range of that candle in such a short space of time is, as I said, is outside the average true range. And then we look at the volume. Of course, we also look at the volume beneath those candles. So, what is happening in the price action, but we have to keep a very close eye of whether this is this is just a fake price action that's just being racked about, manipulated, to suck people into these moves, because as traders we spend an awful long time looking at charts. Nothing much is happening. It's all a bit desultory. Yeah, I think in the Aussie yen yesterday it was a nice trade and it was one of the best performing pairs, but in 6 or 7 hours, David, it moved like 30 pips, but then the other pairs didn't move very much anyway. And those conditions, those trading conditions, can be very, very frustrating. Now, what's also interesting with the Renko also used as an exit. So if you manage to capture that little bit of the trend there, not all of it, there'll be some some decent pips in there. Then we've got the reversal. What are we looking for? Well, first of all, we've got a pivot here, which tells that there is there's a point that the market is going to move higher. The trend dot then moves position. It moves to the bottom of the candle. Although it's still red, because it's at the bottom of the candle, it tells us the price action is moving higher. We stay red. Then it goes into a phase. It doesn't always do this. It goes into this transition phase where it goes to grey. It's a kind of neutral. We also had another pivot fired off here. So we're kind of moving into a little bit of congestion at this level. We've got grey, we've got grey there, we've got a down candle there. Then it goes back to the bottom of the candle with the grey, and now it's moved to blue. You can see here it's the first blue dot, but the trend monitor is still bright red, and this will go, and this, as you've probably noticed, it will keep changing color. It's fairly close to the price action, but it's not as close as the trend dot. So we have the blue dot at the bottom, we have a blue dot at the bottom, we have another blue dot, although the candle is pulling back. So there is price support coming in. It still wants to go higher. Well, what's actually stopping this this price at the moment? Well, let's have a look on my 5-minute chart. This is the congestion that we can see. The trend dot is kind of in the middle of the candles. The trend monitor is still relentlessly red. It's been red since, more or less since we've been back here. But it's still, it might have been a congestion phase with a kind of bearish trend, but there was no firm breakaway. So, I would personally wait until that price, came away from the VPOC as shown on here, reflected on the Renko. So getting back to, so why is this price not sort of is screaming higher, as it were? Well, having a look here, I've got, this is just a 200, it's a fractal 200 MA. It's kind of stuck there. It's a congestion. Now it looks like it maybe wants to move lower. Look at the volume underneath it. Reasonable amount of volume under that one. Almost as much as that one, which is a wider spread, which is sort of a bit anomalous. We've got that candle here. We've got a wick to the top of the candle. That tells us it's a little bit weak. The trend dot was at the bottom there, suggesting it was going to go high. As I said, this is really close to the price action. This is, with the trend dot moving to the top of the candle, as we can see here, there is still some downward pressure. We look, as I said, at the 12-minute. Well, as I said earlier, the VPOC would automatically also tell me that the price action is not going to scream on higher. That of itself is reaching this resistance area based on volume. This candle here, which is a doji candle with a lot of volume underneath it, it's not a reversal candle. It's much more a candle of indecision. So it's this is what I'm expecting based on the price action and the volume that I'm reading, both from the volume and time as registered by the volume point of control, and also the volume underneath here. Now this is quite high, this volume, but it also reflects the fact that we are in the London session, so you're going to get a lot more participation, and you have to read it in context to the session that you're actually trading. Right, so let's go back to the hourly chart. Now the hourly chart, as I said, when this triggers, when the volatility triggers in the slower time frames, this is exactly what we would expect. There's been a little bit of price support buying through here, price has gone through there. So if you've missed all this and you think, oh my goodness, I've missed this fantastic move, I still think this is bearish, I still think the pound is going to be sold ahead of the BOE. You know, I think, you know, the pound Aussie, I'm waiting for one of those nice looping moves. You know, Aussie looks positive because of the noises that have come from the US and China. What am I going to do? Well, you're going to have to, certainly on the slower time frames, wait until the price clears the low of this candle, because the volatility also creates its own support and resistance levels, which the market then will you know, move towards if this move is going to carry on lower. Now, depending on how deep this candle is and the range of this price action, you know, there could be an opportunity if this is going to go lower by using the VPOC once again. And in fact, the VPOC has done exactly what I wanted. It's actually moved lower. It's moved down to this new area of congestion. And I'm so pleased it's done this. You can see it's jumped up there. I'm so pleased it's done this, because one of the ways you can use this indicator, if you've missed this move, well, this move, you know, from here, if you recall, it was up here. This was the move. That's gone. That's history. Now we want to see if this is going to carry on low. And this is where you're not chasing price. What you're doing is you're looking at the structure of the chart and you're looking for an opportunity to re-enter this move lower, potentially. And the VPOC has given you, if you like, the opening. What you do is you wait, because if there is going to be another break down to the downside, you wait until the price has moved lower. And where is it aiming for? Well, it's certainly aiming to the bottom of that volatility candle that we had in the on the hourly chart. So that's just another, I think it's a really sophisticated way of being able to rejoin a move that's in progress by using the chart structure. And the chart structure is given to you by you know, it's framed for you by the volume point of control. Now, getting back to the Renko chart, what's interesting about, just scrunch that up a little bit, let's have a look. What's interesting about the Renko chart here, take it up a bit, it's a little bit too much, is this is the move, this is the correction, the pullback, if you like. At the moment, you know, this is still red. Would you really have to wait and see what happens to this trend dot. It moves up and down, as you can see. We've tried to make these indicators as dynamic as possible, you know, so that you can, once you understand price action and what you're looking at in terms of, as David said, primary trends. This is a secondary trend. You can get a micro trend within a secondary trend, and sometimes that could be tradable. But the primary trend is still lower. Why? Because the trend monitor is still a bright red. This has not been a V-shaped a reversal, you know, so far. This is moving lower, and you know, you can just simply wait based on what the VPOC is doing on the 5 or 3 or 4 5-minute chart, and keeping an eye on the Renko. You may say, no, I really don't want to take a risk going in at this point. Everything is blue. I know this is red. Wait until the dots go back to red and use it as a possible re-entry. Or if you're already in the position, actually use it as an opportunity to add to your position. And looking at the 12-minute again, you can see here, the VPOC did exactly what it's supposed to do on this occasion. It did halt the rise in the pound Aussie, and maybe it looks like it's, you know, that is just a reaction, and the trend is actually going to be lower. And going over to the CSI, now the congestion is also explained by, if we look at the lines, what the CSI does is when the lines are moving in the same direction, we also know that the charts, that particular chart for that pair is likely to be in congestion. This is on the hour. And let's look at where it is in position-wise to do with the pound. Well, they're kind of all over the place at the moment. But the pound Aussie is of the pound pairs. What's that? VIX is going down nicely. Yeah, and the VIX is going down nicely. So the Aussie, so we know by looking at other markets, the Aussie is certainly going to keep on climbing. So that's the reason I looked at the pound Aussie. But looking at a pair that, did you look at the Aussie yen, David? You looked at the Aussie yen. Yeah, looking at the Aussie yen, that certainly would be the pair in terms of a sentiment. So that's what I've got to say. That's very quickly. As I said, there was the fear index. This is from CNN. It's over here. Yeah. Okay. I just want to go on the site a minute. Is that okay? Have you got them? This is extreme greed. Also, be aware that when the markets are in extreme greed, they become very complacent. That also determines what kind of trading condition you are likely to find, and we'll certainly let's hope. We'll see what that happens in our second webinar, which is this afternoon, when we were looking at the indices. Sorry, very quick question. I had a question earlier on about the trend monitor. You may have noticed that I don't have this yellow line generally on the trend monitor. Sometimes I do, sometimes I do. David does sometimes, and sometimes he doesn't. If you have the indicator and you want to know how to add this yellow line, and it's both for MT4 and MT5, is essentially you load up one trend monitor onto your chart, and then you load up a second trend monitor. But what you do on the second trend monitor, you have this trend line mode, which is defaulted to false, and when it's defaulted to false, it will just show the solid colors. You change that to true. So if I were to change that to false, and you go okay, it disappears. But if I turn it back on again, it goes to true. And it's just another. It's the same indicator, but one overlaying on the other. So that's what I say very quickly. The indicators that we've been looking at: quantumtrading.com. This is the trend monitor over there. Let's go back. Where is it? At the top. All the prices are there. These are for MT45, but it's got they are from NinjaTrader, TradingView, and we're also doing the ones for TradeStation. There'll be a little box coming up soon for TradeStation as well. You can buy them individually. There are bundled deals. We've bundled some of the more popular ones together, and of course there's the full package. What we also find is there are so many combinations of the indicators. So if you find there isn't a bundle that suits you, if you just drop David a line, david@quantumtrading.com, we will always do a special price if that particular bundle is not there. Lots of advantages for the full package. We add indicators to the package as and when they're developed. All upgrades are free, both to the platform and to the indicators themselves, and everything is covered by our 7-day money-back guarantee. Quantum Trading Education is where you can find details of the program. The program does include a full set of indicators. You just have to select which platform you would like to use. Anything? Do you want to say something, David? I'll move it over to you. That's it. Just very, very nice. I'm sorry we have gone over, but it's just really, really interesting to see how this price action is developing. As I said, exactly with using the chart structure, consolidation phases, and just waiting. Just now we just have to be patient, but you can see everything has slowed down. It's exactly as it was when we first started this morning, and maybe have to wait for another burst of news to come through. Right, that's it. Sorry, we've gone over time. Anything else you want to say? You're going to tell them about Max and his fishing. we'll tell it that. We'll say that about next time. Trading is very much like fishing, so you know, we'll explain next time we see you. Enjoy the rest of the trading day. We are back later on this afternoon with the indices at 3:15 UK time. So I know we see some of you then. If we don't, we will see you hopefully next week. Although I have to say, our daughter is about to have another baby, and so if the little princess, pink princess, decides to make an appearance, we may have to postpone the date. Is that all right, David? But we'll send you an email and let you know what's going on. Yes, actually, absolutely great news. Can't wait. Lovely. Take care, everyone. Enjoy the trading day.